Fantastic, thank you. So wonderful, rich presentations from our various speakers, and I'm hoping we're going to get equally rich presentations and discussions from the floor. So what I would like to do is to throw open the discussion both to our participants here and to anybody who's watching and contributing from the video link. What I suggest we do is to gather 2 or 3 questions, and I can see we already have one hand up. But I wonder, we have a roving microphone here, and I wonder if you can perhaps just tell us who you are. And what we will try to do is maybe gather 2 or 3 questions together before we ask the panel to come back again. So we already have a question here, and I wonder if we can hand the microphone to this gentleman.
My name is Mobeen Rafiq. My question to the panel was that MFI, why leaving aside development banks and we're talking about MFI? First of all, MFI, if you look at it, most of these central banks are looking after MFIs, but I have noticed that a lot of central banks have given the responsibility back to Security Exchange. The reason is probably because most of them didn't find, because they were so busy, the central bank, that they eventually realized that MFI was not progressing the way it should have been. It has been talked about it. I mean, I've been a dozen times to Bangladesh and I've talked to all these celebrities there at ASA and Gramian and BRAC. But I've noticed that in Africa, for some reason, for example, in Nigeria, you've got 720 microcredit banks there. So it says, so looking at what is happening, what the Dr. Saab just suggested, 35 is not a good development. But the point is this, that none of you mentioned that what is the minimum markup and the maximum markup you're talking about, and what is the minimum loan and maximum loan you are offering. Because basically, and then on top of that, you're supposed to talk about skill development as well, because all these people who are taking loans are micro loans, and if you don't provide them any skill, end of the day you may lose your amount. Most of the people are talking about 99% return, which is, frankly, I've seen Bangladesh, very, very difficult.
Do we have another question to follow on there? Or shall we return back to the panel? Does anyone have experience of working with an NGO or involvement in some of the national surveys? Okay, well let's turn back to our panel, shall we? So what's the role of MFIs in relation to security and exchanges? I wonder if perhaps one of our regulators from this side would like to answer. And should we be setting limits? How do we have a market approach to the provision of microfinance services, or should we be setting limits on loan sizes, on interest charge? And we do have some very different experiences from the countries operating here. Walde, would you?
Yeah, I think maybe I would respond to this maximum and minimum loan. In the Ethiopian context, there is huge demand for loan, as I indicated earlier, beyond our expectation. So that's why there is a tendency of pushing saving mobilization, because this is the only sustainable resources. We cannot bring in foreign capital or foreign savings. So that's what we are doing. So the commercial banks are for the corporate customers, ideally. The microfinance institutions in our context are for micro, small, and medium. And then we have the SACCOs, saving and credit cooperatives, which are expected to meet the financial needs of the poor in rural areas, in remote areas, particularly in rural areas. but they are also urban-based big SACCOs. Now, given this, the problem we have is, according to the central bank's directives in our country, there is already a single borrower limit for that. The single borrower limit is, it has to do with the capital of the microfinance institution. So this is regulated. So the higher the capital, then the single borrower can increase. But what we found, what we have found in Ethiopia is a missing middle. So the microfinance and the SACCOs are for the poor, and then you have the banks for the corporate. So there is a missing middle. Who should provide financial services to small enterprise and medium enterprise? So then we thought that either we scale down the banks, or we scale up the microfinance institutions, or we establish a separate finance provider for this missing middle. So in the Ethiopian context, what we did was, the banks were not interested on that. So we scaled up the microfinance institutions to serve, the relatively, I would say that up to the medium and maybe small enterprise level. So as such, it depends from one country to another country. This is in our case. Maybe they could respond to others. The skill development for the micro and small enterprise, there is a package in our country. But I did some research to see whether the training given by government institutions or by development partners contributes to growth. And the research finding I had was, the training that was given after they were established contributed to the growth of the enterprise. The training that was given before they were established, before they start the business, didn't contribute to the growth of the enterprise. This is what I have.
Peter, I don't know if you want to add any comments to that.
Yes, I think on Ravik, what there is that we are not only talking about the microfinance, what the central banks are doing. The central bank has also tried to enable the commercial banks, for instance, to be able to downscale. And I think we came from the point of view, why is it that the commercial banks are not able to service the small customers, and why are the microfinance clients not able to go to the banks? And one of what was coming up was the issue of distance, either there's distance, and the financial services are basically, the commercial banks are basically at the urban centers, and they have left, of course, the rural areas because of there is no much infrastructure within the rural areas. So what the central bank did was to come up with the agency banking model. Now, the agency banking model means that you can be able to get third-party individuals or entities that are able to deliver the banking services on behalf of the bank. So right now, we have quite a number of commercial banks. They have been able to have all these agents, and these agents are now able to give the service at the lower end of the market. So what we are now having is the commercial banks are able to also downscale using this aspect. Then the other area that we addressed was, of course, the issue of collateral. We've had a number of instances where the microfinance customers are not able to access the financial services from the banks because they don't have the collateral. So what we are trying to come up with is the credit information sharing, which is a credit bureau mechanism, where you are able to now track the customers' bill paying habits, and from that you're able to monitor their behavior. And now, instead of asking for the collateral, you can actually use their credit scores. So for that one, we have already licensed 3 CRBs to try and sort that particular issue. And then in terms of the payments, we have also done a lot of improvements in the payment systems, also for the commercial banks, still trying to address the issue of why they are not able to reach the people who are down there. So in a nutshell, yes, regulation is not really the panacea for all the issues. It complements these other areas. And I think it is the responsibility of the central banks to continue, evolving. The regulation will continue evolving depending on the challenges that are there. You have to continuously evolve. So when you find that there is a certain challenge, then you should be able to have a mechanism that will be able to address that particular gap. And then, of course, there was also the issue of the return. I think you have asked about the return. On average, the return on the deposit-taking microfinance institutions in Kenya is 20%, which is quite competitive. The banks are now around at 16%. We are trying to, of course, bring it further down. I know for this particular market, your rates must be below 5%. So you can see still we have quite some gap to work on. But in a nutshell, basically that is the scenario in back at home. Thank you.
Thank you.
Sure. I'm currently a consultant, but I used to work for various DFIs and donors on this subject. So I would like to congratulate, I would say, ODI and your working group, because we are moving toward another kind of future, which is that most of the Africans are going to be urbanized. I think we have passed the 50% benchmark 1 or 2 years ago. And now we have to look at also the opportunities that are offered by the fact that the gentleman from the Central Bank of Kenya has just talked about the problems of distance and the problems of markets and so on. And if we are in cities, if we are in an urban context, we have many opportunities. First, there is the kind of, in a 50 meters or 100 meters way, you may find enough customers to justify an offer. So I wanted to understand better if there are opportunities to leverage. As CARE also has mentioned to us, they try to work differently. So could you, each of us, give us kind of a optimistic tip about this opportunity that in urban areas you can do business differently by servicing the needs of these populations? The second thing is that also microfinance used to be seen sometimes as a social tool, and that was the benefits of the model in Peru and Bangladesh and so on, just to keep people afloat above the poverty line. But also, I think your working group is called Growth and Inclusive Growth. So can we look at, as this gentleman was saying, the kind of how can we scale up this model so we really now have a growth strategy and we support kind of a fast-growing businesses that are going to move towards the formality and also employ people with decent jobs. So what do these clients need from microfinance or other types of financial service providers that maybe yesterday or today the MFIs do not provide yet, apart from providing a social safety net? So how can we move from social safety net to something which is a bit more dynamic and energetic, as the gentleman was, I mean, all the discussions were saying. And the third area of the big issue, which is shown today in India with this incredible opening of bank accounts, is that this is beautiful to have an account in a formal financial institution, but suddenly we realize that people don't use it. They open it, and there were some mystery shopping experiences in India which are incredibly interesting, that on top of that, maybe the employees and officers of these financial institutions are not very excited to see poor people queuing at the front of their branches to open these accounts. So can you give us also some feedback about the kind of anthropological and sociological, as you are experts in livelihoods, which I am not, I'm a business person. Can you give us some insight about all these obstacles, which are not financial, but which are more kind of social and ethnological, also to have people included in the financial services? Thank you.
Thank you. Yes, well, we'll start with Darshini and then we'll ask Catherine from CARE. And then I have a question also from one of our distance participants.
Let me take the last one. Indeed, the banking sector is not excited about the poor people coming into the banks. But the national government, I think that's where the creative part and subsidy from the national system or national government could support the banking systems to allow this, those who have never held bank accounts to open up bank accounts. It's a very expensive proposal for the banking system. We just have to see how it unfolds. Yes, in the first round, the rules that have been attached with this program are not favorable, because if the account is not used for 6 months, it becomes defunct. And I think there needs to be more flexibility introduced in the system. So we just 6 months old, sort of 6 to 8 months old system, and there is a criticism of the system, but there is also enthusiasm about the system, and we have to see how that's. There needs to be changes in the rules that have been put up in the first place, and I'm sure we'll have a discussion as argumentative Indians are, and probably move ahead in a more practical way. The second issue you raised about urban areas and urbanization indeed provides opportunity, but it has to be managed in a way, because currently we see the urbanization process unfolding in many developing countries to the process of exclusions. And many cities, because they are left to fend for themselves when the new migrants come in, are not also willing acceptors of the migrants coming in the city. So there needs to be, once again, a national government support to include the migrants, especially the poor migrants in the cities, provide them access to housing, and housing provides them address. That is an entry point into the financial system. And so that is also a very large public policy issue. So that needs to be done to be able to be extremely enthusiastic about urbanization process. One thing that I wanted to mention, the previous gentleman who asked the question, I don't think Securities and Exchange Board is the only way of financial putting in finance in the microfinance system. That's not the only source. Some microfinance institutions in India have gone that route, but India has another experience of development banks putting in finance into the microfinance systems. And secondly, a lot of the institutional mechanisms created for the microfinance initiatives are also used for livelihood programs. And so there is a matching of, because microfinance institutions, as Kate was mentioning, depends on how you build local structures. Now that local structures can be leveraged for financial activities, but it can also be leveraged for development activities. And that's wherever and it's not that we have had good successes in this direction, though the scaling up at the scale of India is still a big issue, but indeed it does provide us a starting point to think about how are we going to bring in the local informal sector and their groups into the formal system, and with a set of financial intermediaries, and that's the way it would work. I don't think SEBI, for a Security and Exchange Board in India, is an answer. I mean, and it's not happening that way. In fact, there has been massive infusion of capital in the microfinance system from a bank or National Agriculture Development Bank, that NABARD as it's called, and it is tying up with MFIs to extend credit.
Fantastic. So I think if we may, we'll just go to CARE, and then I have a really interesting online question. And really, so how do you balance the social element of savings groups when you've got a springboard for a successful business? That's really one of the challenges in the urban areas.
Yeah, absolutely. I think, they're very interesting questions. I think the fact that there are 2 billion people who are unbanked in the world presents us with a challenge, but equally an opportunity that we need to work towards, whether they're located in rural areas or urban areas. And so I think the opportunities we found in terms of supporting the emerging needs of those groups have been looking at partnership and partnering with the private sector to develop products that are based on the needs of those savings groups. So I think there is an opportunity to scale up our models. But I think to do that, we also need to be able to provide a business case. So collecting evidence on how groups are using this money or how individuals are using their savings, what are their needs for loans, and then start building a business case to engage the private sector in helping us reach the unbanked. In terms of scaling up, so as well as product development, I think there is a strong need for education, whether that's starting with financial education and literacy, and equally looking at the business skills desired by those entrepreneurs. CARE has developed a kind of group-based training that we deliver to our savings groups. However, there is a need also to identify those individuals within groups who have potential to grow their businesses further and give them more tailored support and support the access to markets or to other service providers.
Fantastic, thank you. And I should also say that physical proximity doesn't actually mean that you can access services if you don't have an address or you don't meet the criteria, so that's still a challenge. So Charlie Callahan, who's a research fellow at the Africa Impact Group, asks us a question about Islamic banking for our East African participants. And he says, what are your thoughts on the potential of Islamic finance, in particular concepts such as Takaful, a group insurance scheme to aid financial inclusion in East Africa? What are governments doing to promote this and provide a regulatory environment for this? Given that countries such as Tanzania have large Muslim populations, this could be a feasible option. So I wonder whether Winnie, whether that's cropped up with any of your members, being our Tanzanian representative on the panel, and whether maybe Peter would like to talk from the Kenyan perspective as well. So who would like to start off?
I'll start.
Fantastic, thank you.
Okay. Yeah, Islamic banking is on the rise in Tanzania, and there is no argument about that. We have a huge population of Muslims in our country, and we think Islamic banking obviously will be a potential in including, you know, the low-income people in the mainstream of financial services. We have banks which like the Kenya Commercial Bank, National Bank of Commerce, which have a particular section with Islamic banking. We have one bank which is exclusively for Islamic banking, Amana Bank. So we think when it comes to banking in the regulated environment, there is potential for that. And also we have what we say, we are talking about addressing the Islamic microfinance. Some microfinance institutions, especially which are in areas like Zanzibar and Pemba, where we have a huge, a population relatively high of Muslims. They are also having that. They are continuing with the product development on Islamic products and services. And one thing, we have had a number of trainings from Pakistan. I don't remember really the institution, but it has been carrying a number of training around the country so that at least people can understand on that. And of late, the regulatory body for insurance in Tanzania had an extensive workshop on Takaful insurance. So I'm aware about that. So it means there is a lot of development going on when it comes to Islamic banking.
Peter, do you have you had discussions about that in the central bank context?
Yes, and basically I think the Kenyan experience is pretty much what my colleague from Tanzania is saying, because we realized that the need for it. So what happened is that the law has actually been enabled, and that's why, as one of the examples she gave, is actually Kenya Commercial Bank, which is actually a bank that is Kenyan-based, but of course it has branched out to the other East African countries. But then also we have about 2 other banks that are predominantly Islamic banks. We have what we call the Gulf Bank and the First Community Bank. These are predominantly Islamic banks, so they have been licensed and they are actually offering Islamic products to cater for the the Islamic Islamic for those to offer the Islamic products. So it is something that it's already there, and something has been done about it.
Thank you. Well, we're nearly coming to the end of our session, so I don't know if anybody else has any other burning questions or comments that we need to make. We've got another couple of minutes. Right, one question from the back there, please. Can we have a microphone over there? And please tell us who you are.
Is it on? Yeah. Hi, my name's Julian Thompson. It was just a question based upon, we've been talking a lot about the actual microfinance element and its impact. But I think it links to a question that was asked before about the kind of innovation. So how much innovation are we seeing, from these individuals and companies and small to medium enterprises that are receiving microfinance? So it's that sense of, what's the power in this? How is this going to drive economic growth? How is this going to drive wealth for these individuals? And I suppose that links to the whole question of access to markets. And yes, you can give them X amount to do this, but is there a bigger vision behind these individuals and them receiving the finance that they get, and what that could ultimately mean for Africa?
I don't know whether, Waldi, would you like to talk about the Ethiopian experience in that context?
Actually, I think microfinance is not really the social safety net in our country. It is a tool to promote agricultural development, small enterprise development, and it stands for productive purposes. So, as such, the innovation, particularly when we come to micro and small enterprise financing, the challenge is always this collateral issue. So is there any innovation to address this collateral issue? Because in the rural areas, it was much easier, a cohesive group, and we used this group lending methodology in Bangladesh for a smaller loan size. The problem is when you need a larger loan size, that methodology does not work. And then you come to the urban areas, and then you talk about these banks, there is a risk. And this is the adverse selection issue, the moral hazard issue comes in there, and it's becoming difficult. So the innovation is really on this. So we have tried to really use different types of collaterals, like the city council taking a collateral, credit, what we call it, this a risk fund. We have established with regional government support and microfinance. We have used this, we established 5 big lease companies to do this, because this manufacturing, the government was interested on manufacturing sector in particular, but it was not growing. Why? So the thing is, this manufacturing enterprise do not have collateral to buy machineries. So the thing that the government intervened was to establish 5 big lease finance companies to provide machineries. Even, I don't know, this is what we are attempting, because it was a challenge in the last 5 years. We cannot make a breakthrough on that. So one innovation is big lease companies to really give them to replace this property collateral issue. So I think if we want to progress on this small enterprise financing, you have to address the issue of collateral in a very innovative way.
I have to also say, from our studies on the ground, if I can presume on my position as chair, that although we have been looking at the smaller end, the own account and the very small enterprises, that that I think that there is a problem of the missing middle, that there seems to be a gap. And as yet, microfinance isn't necessarily reaching down to the growth sectors that we're looking at, or innovating in terms of financial products, for example, through mobile phones. But we're not using microfinance as widely as we had expected. So I think that's actually a really relevant point that you raised here. So sadly, I think we've reached our time. But for those of you that were watching at a distance, thanks very much for joining us. For those of you that are here, we can continue the discussion afterwards, because there are drinks outside. And I think if we could give a huge thanks to all our panel who have travelled so far to be here today and brought such a wide range of experience. So thank you. And before we finish, I also just wanted to say thank you to the ODI team, who've been hugely supportive, to my colleagues Peter Mackie, Colman Soka, Rosemary Atieno, Neha Bastier and Ben Gascoigne, who are also here in the room today. It's a fantastic team to be with, so thank you. And also thanks to Dirk and his team. Thank you.